a lot of manipulation going on, whether it's the stock market, precious metals market, even crypto now.
As far as the national debt is concerned, no matter who's in office, it only gets larger by the year.
All the investors, they went from wanting cash and stocks, that inflating stock market, to this.
It's actually more risky today not to own gold than it is to own gold. Chris, welcome to the podcast.
Thank you for having me.
I appreciate you coming. So I wanted to ask you, my main thing I'm curious about is right now, especially with silver and gold both taking a huge dip today, what are you hearing from your clients the most that gives them the reason to want to keep continuing to stack precious metals like gold and silver?
Longevity with precious metals have been, basically the name of the game with, precious metals for as long as I've, been around and known. They just want to know basically why the dip is happening. And then, to answer your question as why they're holding on is because when you have a $38 trillion inflation, which is, it's probably the main reason, for what's going on in the economy, and especially times of uncertainty. And then you have, obviously talks of war. You're going to see, a lot of the people who've seen 2008 to 2011, or even in the last 4 to 5 years with COVID, hold on to that. And strictly just because they want to hedge against inflation, they want to protect themselves against the government. A lot of my clients, I will say, are actually anti-government too. Whether it's, Trump, Biden administration, whoever may be in office. History has shown that no one really contributes to our nation's debt. When you have that, when you have all the variables working, in our favor, and again, like I said, talks of war happening today, you're going to see a lot of our clients hold it rather than panic sell like a lot of people do.
Gotcha. And just to add to that a little bit, I think that our clients, because they're very well educated, use this as an opportunity to actually purchase more at a better price. Yeah. Whereas a lot of people, they see the price of oil going up. They see a lot of, uncertainty in the world. They want to have more cash on hand because they don't know what's going to happen next. But the people that are smart are getting in at the lower prices and then
buy the dip. Absolutely. Yeah, absolutely. 100%. And, although, it used to be, cash was king, right?
Right.
It's not that anymore. And I don't think it'll ever actually go back to that, not only because of the inflation, but, you have a lot of manipulation going on, whether it's the stock market, precious metals market, even crypto now, they're regulating it.
Absolutely.
So, to add, to your original question, that's another major variable working, again, in our favor, or at least our clients' favor, I should say, working in our clients' favor, because no one wants to be taxed anymore. Mm-hmm. No one wants their hard earnings, watch them go up, let's say 10 grand just for 4,000 of that, or almost goddamn near, excuse my language, almost near half, taken away.
Yeah.
And the good thing about precious metals is those, again, who know, whether it's numismatic coins or even bullion, you don't really get, hit with there's not many major tax implications on that. You basically, keep everything you earned on that, which is a major bullet as to why gold and silver are a safe haven of investments.
Absolutely. And, the biggest thing you said is that as far as the national debt is concerned, no matter who's in office, it only gets larger by the year. When you look back over time, it took, the national debt, when we came off the gold standard in 1971, our money was backed by this until 1971.
Yeah.
We only had about $300 billion worth of debt when we came off the gold standard. And the country had already been in existence for, at that point, 200 years. Basically, in the last 50 years, we've gone from 300 billion to almost 40 trillion. So that's a huge difference.
We went from the biggest creditor nation to now we're the biggest
debtor.
For lack of a better term, but debtor nation.
Yeah. And so, that's the difference between having gold standard on your money and a fiat. And, just going back in time, I'm sure you remember 2 years ago, each one of these bars is 10 ounces. 2 years ago, what were we paying for 10 ounces? It was basically $20 an ounce, so it'd be $200, right?
Well, I'll put it to you like this. April of 2020, silver was at $9 an ounce, $9.67 exactly.
Okay.
Even with the slight drop, it's still touching, on the cusp of 80.
Right.
That's almost a 9x in just 5 years, 6
Absolutely.
years. And it really, we can't even say 5, 6 years, because it was really the last 2 years that we've seen the spike, gold jumped from, what was it, 2,200, 2,300, maybe a little bit more, a couple hundred more.
It was like, I remember specifically in the beginning of 2024, it was under $20. It was like 19 and change.
Oh, that's in silver. I'm saying for gold.
Oh, for gold, it was under 2,000. Yeah, it was 1,800, 1,900,
something like that. And now we're over 5,000, and we're actually it's holding strong. Again, even with the panic sell that you see, people want to cash in their profits. Again, Merrill Lynch, Morgan Stanley, regulating, excuse my language, the hell out of this market because government can't buy at all-time highs. Yeah. See, this is where I truly feel the major problem with the precious metals, area, is. You have Merrill Lynch and Morgan Stanley who trade SLV, paper traded SLV and GLD by the thousands daily. And for every one paper traded contract that they sell, it actually stands for silver for 5,000 ounces of silver, and for gold, roughly 300. I think it's 286, something of that nature.
Right. You could see this all on the U.S. debt clock.
Yeah, absolutely. But now when you have the major paradigm shift in the global thinking of all investments, right? All the investors, they went from wanting cash and stocks, that inflating stock market, to this. Mm-hmm. Problem is, we don't have enough of this. You have a 53% increase in the industrial demand. You have, like I said, thousands and thousands of GLD and SLV being traded, by the minute. You got the government, or central banks, I should say, loading up on roughly 3 metric tons of silver and gold, monthly. You know what I'm saying? You have a lot of things that are, as much we have working in our favor, you have a lot of things, almost working against us, but simple supply and demand, it's going to outweigh that at all times. When you have the mint shutting down because they were just, I believe it was January of 2026, they talked about stopping production on silver temporarily. Yeah. When you have that with, the industrial demand, it's 5 ounces of silver per, electric vehicle, 1 ounce silver per solar panel. You feel like I said, 53% increase within the last few years alone. When you have that, when you have the inflation, that's why I tell you, you do have a mixture of variables that can be working in our favor here if you know how to use them to your advantage. Right. Like you said, buying on the dip, right?
Yeah.
You have a silver touching $120, drops down to 70. Believe it or not, as much as that scares people, we want that because not only does that show the potential of where silver has room to grow, right? It's already hit 120. So we know the all-time highs are 120. But on top of that, it allows people, it gives people almost like a second opportunity, for people that felt they missed the boat on the first time. It gives people a second opportunity to, we've seen what happens in times of uncertainty, times of war. Let's jump in now, which ultimately will protect them in the long run. And truly, I feel this too, and a lot of people don't talk about this either. When the monthly delivery requests of hard tangible assets from January, like I said, of this year, going from 22,000 to over 275,000 in just 3 months, that should tell you enough in itself. And that's just on the 100-ounce bars, by the way, of silver.
Right.
So that should just, that should be able to tell you enough in itself.
Yeah, the increased demand is more important than the day-to-day price.
Yeah.
So just to simplify that, if you look at the day-to-day price and it's down, but the demand is still high, that's a perfect opportunity to get in, especially if you were looking at buying. It makes me laugh when people call me and they're like, I wish I would have bought it before it hit 120 and then it comes down to 70 and they're like, oh, I want to wait for it to go lower. Well, you might be waiting in perpetuity because nobody knows the exact highs and the exact lows. That's why it's, I tell my clients, buy every dip and you will cost average. And, none of my clients are upside down because they've been buying from me when it was under $20, when it was $30, $40, $50. They might have bought some at 80, they might have bought some at 90, but their average cost is still well below where it is today. I just had a client today that has a few $1 million under management with us, and he needed to come up with $200K. And so he sold $200,000 worth of silver with us today with the dip.
But 2 years ago or 3 years ago, however much he sent in today, it would have been 3 times more, almost 2 to 3 times more than that a couple of years ago.
So I did the math with him, and I just looked at his latest purchase. His latest purchase, his cost was like $41 an ounce.
Nice.
So his average cost is probably in the 20s or 30s. So it doesn't matter. He cashed out $200,000 worth. It's all profit. Yeah. And none of that is even his original principal. And he was able to take that cash. And this is all within the last 3 or 4 years. 100%. So I mean, that just shows the potential that we really have here.
Yeah. 2008 to 2011 should show you alone what silver and gold can do. And it's not necessarily my opinion about where it went to. It's about where it started to where it went to. You know, what was that figure in the middle? That how much was the profit margins? Basically, what I'm trying to get at. Like I said earlier, and you know what we were talking about, silver 5 years ago, 6 years ago was $9. It's almost nine. It actually has 9x since then. Again, it did take a little drop. So we'll just go based off today's spot price. But just off today's spot price, it's essentially 9x.
And so like these numbers are all what we need to look at as a long term. I think that the real bullet points that we hit here today is that it's not about the day-to-day price, it's about the long-term hold, and it's about the demand and the structural demand, the fundamentals of why people buy silver and why people buy gold. As long as that hasn't changed, silver's on the elevated critical minerals list. We're in the 6th year of a deficit where we're actually using more silver than we're producing each year.
Absolutely.
So the deficit has been growing consistently over the last 6 years. All of the fundamentals to why people have been buying silver and why people have been buying gold are still exactly like they were yesterday and exactly like they were 2 months ago at all-time highs. Yeah. And so these dips right now where you're able to get gold under $5,000 an ounce and you're able to get silver
under 100 even.
Yeah, under $100 an ounce. These are a gift and it gives you more time to stack before we reach new all-time highs. And I think by the end of this year, we're going to be over $100 an ounce for silver again, potentially $150. And UBS Investment Bank just said yesterday that they believe gold is going to be over 6,200 by the end of the year. And I think that's conservative.
Yeah, to be honest with you, I think that's on the extreme conservative side. I feel we could see gold at, to be honest with you, if everything goes how it's been going in the last year, we'll even say, I think we'll see gold at 7,500.
Yeah, absolutely.
And even then, I still feel I'm being on the safe side because it did jump, 2,500 realistically in an 8-month span. It wasn't even a full year. It was really 6 to 8 month span that we saw that jump.
Right.
I would say last November, it was bouncing around, maybe a little bit earlier than that. We'll say August. It was bouncing around roughly 3,000, 3,500 even,
Right.
So in the last 6 to 8 months, even if you really want to get down to it, that enough alone should also show you. And we're in a worse economical time than we were 6 months ago, believe it or not.
Right.
Now we're dealing with, war with Iran and whatnot. Yeah. And as everyone knows, in times of war and times of uncertainty, gold and silver go, flourish.
Yeah. Even JP Morgan put out a statement. They think gold in the next couple of years is going to be 8,500. Jamie Dimon thinks we could see it at $10,000 an ounce. So the upside potential is astronomical, and it's actually more risky today not to own gold than it is to own gold.
Absolutely. And on top of that, you have to remember the interest rates are nowhere near they probably should be, and they're only getting lower. So when you have people already as is having trouble paying, for their car, insurance or car payment or mortgage even, what are they going to do? They're going to raise the interest rates, cause more problem, let people, really implode themselves?
Right.
No, they're going to, do their best to take money out of the money supply, lower the interest rates. Problem is with that, there's no incentive to put money on the bonds. See, if there's no money in our bonds, our currency might as well just collapse right now.
Absolutely.
So,
and that's why, so many countries are favoring gold over U.S. Treasury bonds right now.
And what I really hope for, I don't mean to interject, but what I really hope for, I hope that the younger generation, it starts to resonate with them. Because if you saw a little bit within the last few years, crypto really was, doing something.
Yeah.
But I feel the moment the government got involved, what was it, FedCoin? Something.
Well, they did the World Liberty Financial something. It was a coin put out by one of Trump's sons.
Yeah.
It was a meme coin.
Yeah, and even then, don't get me wrong, everyone are fans of whoever, regardless. But I truly feel the moment the government gets involved, that starts really having people turn a blind eye towards that that market, and really just shuts off the whole younger demographic more than anything, because the younger generation really doesn't like the government, in my opinion. It doesn't matter, like I said, who's in office. It's just about what are we going to do for this country? How are we going to make it better? What are we going to do for the people? And it just really seems that the government has more interest in what are they doing for themselves.
Yeah.
We were talking about this earlier. What was it, the most famous 9 words that Reagan said?
Yeah.
I'm from the government. I'm here to help.
Yeah.
He said it's the most dangerous thing you could hear. So when you have, that coming into effect, and with the social media and technological advancements of Google at your fingertips nowadays, anyone can fact check you. So that definitely, puts a damper on, like I said, the younger generation putting trust in the government.
Yeah,
So,
and I think that's a perfect application to, when people, the whole point of crypto in the beginning, and I was there in 2010 buying Bitcoin because my friends wanted to play online poker and it was illegal.
yeah, I was going to say VPN.
So the whole point of Bitcoin was to not have the government involved with it. Now that the government's involved with it and the banks and, all the financial institutions, I think that Bitcoin has actually lost the plot a
well,
little
have you
bit.
seen it dropped, right?
Yeah.
I'm pretty sure it's almost touching back to what, 30, 40,000 now?
I think it's going there. Right now it's the high 60s, low 70s.
But still, it was at 100,000.
It was at 120.
Yeah, exactly.
So it hit 120. I think it'll be back to 35,000 by the end of this year.
And you really didn't start seeing that turn, that downward, spiral till the government got involved. And again, in my opinion, I could be, extremely wrong on this, but it just seems like that, based upon an outside, viewer when it comes to crypto, because I stick to gold and silver.
Yeah.
I truly feel, like you said, it's been around since, before our time, since before Jesus Christ. And it's only gone up since. Only gone up since. It might have taken a slight dip, but it's still up 85% within the year, last year. And that's also something that people forget. People are so short term, or people are so focused on the day-to-day profits. How much can I make, in this hour? How much? They don't see the light at the end of the tunnel.
Yeah.
They don't see the bigger, the bigger picture here, which ultimately has always been gold and silver. Always.
Absolutely. Well, wealth protection is like insurance, and insurance, nobody thinks about it until after they need it, till after it's too late. That's the type of thing that people are like, oh, I don't need that. I don't need that. And then the second that I'd rather have it and not need it than need it and not have it.
Absolutely. And actually, I saw something last night on a podcast, which does symbolically, I should say, pertain to gold and silver. Rich is loud. Wealth is quiet.
Right.
This is wealth.
Yeah.
Absolutely. Gold and silver, platinum, palladium has always been wealth, protecting, your currency.
Yeah.
Compared to just your money. That's where I see maybe, I could see where people maybe overlook gold and silver.
Yeah.
Because it truly, it's silver especially, it's really a sleeper. It's really, people are forgetting.
It's the quiet giant.
Exactly. Thank you. That's the word I'm looking for. That's the term I'm looking for. Quiet giant. It really is. But I hope that gold and silver really start resonating with the younger generation a little bit more. You had 100,000 5 years ago.
Right.
You put it into real estate. You'd walk out roughly, I believe it's 500,000 and some change, something like that today. You had 100,000 in the stock market 5 years ago, you'd be at roughly 200 and some thousand, 300 and some change. You had 100,000 in gold and silver 5 years ago. Silver alone, let's say you had 100. You, again, we'll go to the all-time highs. It's over at 10x. You'd have over 1.2 million.
Absolutely.
Off that 100 grand.
Right.
Even with a slight drop, you're still at 800, 900,000.
Yep.
If you cashed in today.
And if you have American minted coins, you're exempt on capital gains tax.
Absolutely. That I completely forgot about that. Thank you for reminding me. That is 120%, probably, I would say, the biggest reason. It's untraceable, untaxable. You keep, like I actually did mention before, you keep 100% of your earnings. Yeah. 100%. So that's a big key factor. And that goes back to what we were saying, people being anti-government. No one wants to deal with the IRS. They're trying to tax your Venmos, your Zells, everything of that nature. You can't tax this no more.
Same with the cryptos. The cryptos are all monitored.
Absolutely. Yeah. No one wants to deal with that anymore. And I agree with them. The government takes enough money as is. And if you live in the state of New York, I mean, you have to deal with state tax.
Right.
If I was living in Florida, at least I wouldn't have to deal with that.
Yeah.
But when you're living, in New York and places of this nature, you're getting even more of your money taken from you that you're sitting there, day in, day out, sweating hard, working hard for. What I like to do is I like to tell my clients, let's say you're liquid for about $1 million. I would say at least right now you want to put up to 40% into gold and silver.
Absolutely.
Diversifying your portfolio in its finest fashion.
Yeah. Even Bank of America last year, they said to their shareholders, they said, under normal circumstances, they usually recommend 5% to precious metals. They said between 25 and 30% wouldn't be a bad idea, basically.
Yeah.
Which is, for a bank to say that, that should make people.
Yeah, because they only care about keeping your money there. They're going to do everything in in their power. I mean, to the point where banks started offering sign up now, you get $250 automatically put in over the next 5 months. I mean, I'm sorry, over the next 10 months, $25 a month gets put into your bank account by us and your savings or whatever the case is. But when you have banks saying that, which are basically the majority of the people that are looking to take you away from something like this, that's when you should definitely start loading up. Follow suit, I should say.
Absolutely. You know, I think that we've given the people a lot of information.
For sure.
I think the best thing people could do now
Act fast.
is act fast. Contact us at Premier Coin Galleries. We have a phone number in the description and in the link, but you can contact us. We also can get you more information on our website at premiercoingalleries.com. If you want to request a free information kit, you can go there and fill out a brief survey, and we'll be able to see what type of investment is going to suit you best. So go to premiercoingalleries.com, answer a few short questions, and we'll set you up with a free consultation with one of our experts here, like me or Chris. We have a variety of different things, from rare coins with collectible value
To bullion pieces that are, straight 0.999 purity.
Absolutely. Thanks so much for coming on, bro. I appreciate
Thank you for having me. Genuinely, I appreciate this.
Thanks, man.